Welcome back to Editor's Roundtable. We're talking about a couple of buzzing sectors. Let's talk about generative AI, which is a space that everyone is looking at now. Three companies that are doing a lot of work in this space. Let's start off with Cyient, which has been the biggest mover this year. Now, Cyient has teamed up with Microsoft to drive innovation using generative AI. They already have successive tools in this space like SciFast, which is an AI-powered test automation platform, and SciArc, which helps regulatory experts by bringing a 40% reduction in their time and cost using AI technology. Now, we spoke to the company. Remember, the stock is up 185% year to date. The company said that there are many use cases in generative AI. There are a lot of opportunities around documents to be automated, and they maintain a very healthy growth of 15 to 20% in their revenues for FY24. Happiest Mind is the other company that we're looking at, which is doing a lot of work in this space. They have set up a new business unit focused specifically on generative AI, and they are targeting generating 20% of their business from generative AI in the next 5 years. One of the other pioneers in this space is Tata Elxsi. They have a product called Tata Elxsi Edge AI that's witnessing a surge in adoption. They have AI accelerators, associated technology stacks, which is facilitating wider adoption of generative AI tools. These are some companies, of course, that have had great returns in the past. But Mihir, my question to you is this. Many of these IT companies are, looking at generative AI as a big tool for cost reduction and better technological advancement as well. Do you think the returns have been factored into the stocks, or do you think that there could be some more to go?
Sure. I think there are a couple of ways of looking at it. There will be, in the long term, an impact on the programming part of it, but that will be in the very long term. You may actually see productivity of programmers enhanced. To that extent, you might see reduction in the programming hours required. So that probably may be a value destroyer in the longer term. But in the shorter term, what is happening is that there is I would say, arms race happening almost in the AI space, where large companies are now trying to develop their own specialized AI model for their specialized verticals. Now, that kind of requires a lot of data tagging and processing, which may not be programming kind of work, but it will be more like the KPO work or the BPO kind of work. That might increase in the short term. That might actually explode in the shorter term. So that can be an opportunity. The only constraint will be training the number of people required to tag these gigabytes, terabytes of data, and tagging and sorting the data to train the AI models. So that's a big emerging opportunity which some of the smaller companies
But do you think for
exploit.
companies like InfoEdge, where there is, IT services, the hiring business has been sluggish for a while,
Yes.
or maybe Teamlease even, right? Staffing. For that kind of business, you think it's this is negative in that sense over a period of time? Because you don't need that many people.
But then you'll require more of these, KPO, BPO kind of programmers,
Right.
which also first of all need to be trained.
Right.
So I don't think it'll have an immediate impact in the short term.
InfoEdge, of course, has got Zomato.
In terms of big themes to watch out for in 24, given that the Fed might cut rates by at least 75 to 100 basis points, earnings have been quite resilient in India. If I have to ask you three themes to pick for next year, what would be your top bets?
For India, I would say that we need to basically look at the physical asset creation theme,
Okay.
which means infrastructure, manufacturing, and real estate. I think the domestic theme and the physical asset creation will be the theme. We cannot grow at 7-8% just on services.
Okay.
And the government recognizes that we need physical asset creation to create jobs. So these are the themes that I would look at.
Mihir, IT services, I think that's one space which you think is still, it's got legs as we head into 24?
Well, relatively, I would still prefer the domestic place because while we are talking about slowdown, it was expected to be a recession in the US, but now we are talking about a softer landing, which means things may not be as bad. But the thing is that I don't really see upgrades coming in yet in the IT services space, which means that it will be more business as usual, high single digit or low double digit kind of growth. But when we are expecting 15% earnings growth for the overall market, it means that IT sector earnings growth may be lagging. Of course, some of the mid caps with differentiated strategies might do better, but in general, I think the sector would still be a underperform versus the domestic place.
So let's wrap up. Any big plans?
I have a suspicion that
So,
this
yeah,
this
this
trend
will not-
that we are seeing will not
Yeah,
be
will not-
visible
will not
next
be
Friday.
But whatever are your Christmas and
Nigel?
New Year plans, don't forget that you're going to spend a lot of time in traffic wherever you go. So keep that in mind.
Stay at home, spend some time with your loved ones, call people over, have a good time, knock in a few.
Let them suffer the traffic.
And give them good entertainment when they come home. So, and good malt.
Okay, guys, Merry Christmas to all our viewers. Have a great one. We'll be back with you next week. Maybe some of us will be back with you the week after.
Yeah.
So have a good one. Thanks for watching.
CNBC TV18, embarking on a quarter century of excellence.